It looks like it's just going to be us today. I do understand. Um, Everyone's out with their fam. You know, people don't got. Well, they do got time, but I mean, personally, I already ate. I already spent time with the fam, so I got time. So let's get right into it. No more talking. Let's get into it. So we're going to be doing a top-down analysis, ES and NQ. My levels are going to be on MES and MNQ because I trade micros. Solely due to partials, and you can basically move around your leverage much smoother than if you're trading minis. But levels should be the exact same. Okay, starting with the weekly here on both of the indices. Actually, let's start with the dollar. The dollar is going to be playing a big role into what we're looking at. So, starting with the monthly, just join. Let's see. What up, Sure Bear? Welcome, welcome. Yeah, we just started, so came right on time. So starting with the monthly on the dollar, and if you don't really look at the dollar, I would recommend starting to look at it because it gives you a gauge on if the indices are bullish or bearish. It gives you like that high time frame bias, and that's what matters when you're trading intraday. So starting with the monthly, we have this BISI right here, which is marked right here, monthly BISI high and monthly BISI low. We came down into it, swept liquidity right there. Almost redelivered the full thing. However, if we drop down to the weekly, we had a weekly breaker here that previous week we came down, tapped into it, sent us higher. So what is our area of interest, higher time frame for the dollar? It's going to be 104 point, basically 104,700. This buy side liquidity here is going to be our level of interest going into this week's trading. Now, this week's trading is kind of awkward because today was obviously a bank holiday. Going into tomorrow, the day after a bank holiday, is low probability. Not saying it's not going to move. It's definitely going to move. But the chances of you getting a higher probable trade with 10 points plus, which is what I look for when I'm taking a trade, I look for 10 points or more. The chances are less of that happening. So I'm going to be live trading Wednesday. Tomorrow we're going to paper trade. I'm still going to live stream, but for you guys that are in alerts or VIP, we're going to paper trade, just tape read tomorrow. See what we can find, just to build some confidence going into the week. But yeah, for you guys that just joined, we just got started right now. We're going over the dollar. We literally just got started, so you guys are right on time. So if we're bullish on the dollar, what does that tell us for the indices? That tells us we're bearish for indices, right? Now, what can we expect here going in if we're on the 4 hour here on the dollar? Don't mind those equal highs. On the lower time frame, they're equal highs. But here on the dollar, we've been having higher highs and higher lows. So off of this weekly fair value gap, oops, off of this weekly fair value gap, or aka BISI for bullish fair value gap, we had a weekly fair value gap and a weekly breaker here, which is going to be this weekly breaker, liquidity swept, displaced past this leg lower, changing the state of delivery, retracement back into it, finding a imbalance, heading higher. So now we should expect to seek these highs right here. So short term, this 4 hour fair value gap previous week, we tapped into it, headed higher on Friday. That was what we were looking for on Friday when we were live streaming. That was the end of session short we caught. Right there, we were looking at this imbalance. Now, what are we looking for this coming week? So as we can see here, looks like we're creating equal lows on the dollar. We can expect these equal lows to be broken, tap into this 4 hour fair value gap, or we can even narrow it down to the 1 hour. It's the same thing, same imbalance. Tap into here and target these equal highs. Now, if we go on the 15-minute, these equal highs look like this right here. So there's obvious liquidity there. There's this buy side liquidity here right after it. So let's mark that out. So retracement, so accumulation, as we can see here, manipulation, and then distribution, right? Which is what we practice during our sessions. So retracement here, distribution here, targeting the equal highs, eventually targeting the buy side liquidity, and eventually targeting our weekly target, which is going to be this 104,700. Now, that's just a gauge on biased for the dollar. So if we are short-term bearish on the dollar, what does that tell us for the indices? The indices will have a retracement higher, maybe seeking this weekly 50%, the wick of it. Mark that out on your charts. Mark out the 50% of the previous week wick. Mark that out on both of the indices. That's going to be important going into next week. So I'm expecting a retracement on the dollar, sending indices higher into the 50% of the weekly wick. And once we tap into that 4-hour fair value gap and that 50% of the weekly wick on the indices, dollar higher, indices lower. And now that we have our gauge on bias on the dollar, let's focus on the indices now. So we're on the weekly right now, and I already mentioned mark out your weekly 50% or consequent encroachment of the previous week wick. Let me drink some water real quick. All right. So with that in mind on the weekly, what did we do last week? Remember last week's analysis? We did a group analysis last week, and we were saying I'm going to be watching the previous week high right here. I posted this on YouTube, by the way, so if you guys want to go back and watch the previous recording, just so you can see how we played out the previous week, I said I want to see this previous week high get taken and a displacement to the weekly imbalance, which is this weekly SIBI right here, right? Is there sound? Can you guys hear me? Give me a thumbs up if you guys can hear me in the member voice chat, because I believe somebody just said, oh, okay, perfect, I can hear now. All right, yeah, I don't want to be talking and then there's no sound. Perfect. All right, so last week we said I want to see a displacement to this weekly imbalance. At the same time, we want to be looking for a PD array on NQ, which is this weekly order block, which we tapped into there, and we respected. Notice how we didn't close inside of it or above it. We wicked off of it. Same thing right here. Now, what can we expect going into this week? We can expect lower prices because of the dollar. If we're bullish on the dollar towards the end of the week, Wednesday, Thursday, Friday, if we're looking at the weekly profile, we can expect a Wednesday, Thursday, Friday expansion lower. Mainly Wednesday and Thursday, which are our red folder news, which you can check out in the economic calendar channel. There's red folder news on Wednesday and Thursday, so those are the days where you want to be trading. So with that being said, if we drop down here to the daily, on both indices here, we can see that we respected, not only did we respect the weekly fair value gap, but what else did we take? We took this week buy side liquidity here on the daily, right? This 45 level on ES, which is, where was that? That was right above into our weekly SIBI. So we swept liquidity, tapped into it, headed lower. That was expected there. On NQ, what did we do? I said in the analysis, also for you guys that are in alerts, I said I want to be also watching NQ to take out this daily buy side liquidity here, and at the same time tap into that weekly order block, which is exactly what we did. We took it there, so we can delete that. Now, what can we expect now? So going into tomorrow, Tuesday, I would like to see a Tuesday high of week. So I would like to see something like this, where we come up, tap into the 50% of the weekly wick on both indices. At the same time, I'd like to see the dollar tap into this 4-hour BISI. So dollar low, indices higher, right there. as we do that, going into Wednesday, Thursday, I would like to see an expansion lower, short-term targeting this daily BISI right here. And we also have a daily order block on both indices. As we can see here, daily BISI right there. So we can expect that to be our draw on liquidity short-term going into Wednesday, Thursday. So if we go here on the 4-hour, we're going to have more information. Does anybody have any questions so far as to, before I move on to the 4-hour? Nope. Nope. All right. We understand where we're at. We're all on the same page. Perfect, perfect. All right. No, sir. All right, bet. Yeah. All right. Let's move on to the 4-hour now. So the 4-hour, what does BISI mean? That's a really good question. That is a really good question, and I was hoping someone asked that. So we all know what a fair value gap is, right? So we have a fair value gap, but how do we distinguish a bullish fair value gap from a bearish fair value gap? So bullish fair value gap is when we see displacement higher, for example, in this leg here, on the both indices, we have legs higher, right? Okay, and what do we see here, right? We see that fair value gap. Now, is that bullish or bearish? That's bullish, right? So we would consider that a BISI. Just a little, just take that into, so bullish, BISI, but they both start with a B. Okay, for bearish, it's called a SIBI. BISI means buy side imbalance, sell side inefficiency. So buy side imbalance, which means we displace higher, so there's an imbalance towards the buy side. Sell side inefficiency, so inefficiency has not been offered to sell side yet, so that's why we want to see retracements into these inefficiencies for sell side to head higher. So that's what a BISI is, bullish fair value gap. SIBI, sell side imbalance, literally just the opposite, buy side inefficiency. So SIBI is a bearish fair value gap, and I would typically note them as plus fair value gap for bullish and minus fair value gap for bearish. So we can distinguish them. All right. So, did we get that? Perfect, perfect. All right. Glad we understood. So, what can we expect now here on the 4-hour? So on the 4-hour, I'm currently noting this 4-hour breaker here on both indices. So as we can see here, especially on ES, it's much more cleaner. It is also on NQ, but on ES we have a high, a low, a higher high, tapping into a higher time frame PD array, which is what you want to see. And then we would want to see a close below this breaker right here. So this is our breaker, okay, but our true change in the state of delivery would be this order block here. So I want you guys to mark out both of these things. We have the order block on Tuesday and Wednesday right here. This order block on the 4-hour is currently holding price, okay? And if you hear my dog, that's my neighbor's dog. Dude is barking all day. But we can expect this order block to hold for now. If we want to see a change in the state of delivery, we would want to see this order block get disrespected right here. And that would basically be our, I guess you can say, our signal for lower prices. Now, do keep in mind this daily fair value gap, but for now, I'm currently marking out this breaker right here. Now, for now, I would like to, like I said, I would like to see a sweep of this high. Oh my God, this guy doesn't shut up. I would like to see a sweep of this short-term high, and then after that, what would we want to see? A tap into the 50% of the weekly wick, right? And what is that right there? Does anybody know what that PD array is? Amco said rejection block. Wow, bro was quick with it. Yeah, good job, bro. Amco said, sorry, which is the breaker block here? The breaker block is going to be these down close candles. That's your breaker block. Now, a close below doesn't instantly mean short it, you know? I would like to see a displacement past this low right here, right? But first, I would like to see this short-term high get taken, tapping into the 50% of that weekly wick, and it just so happens to be conveniently placed with a rejection block. So going into tomorrow, I want to see a Tuesday high of week. Boom, tap into there. Take out liquidity, head lower, and then we have an imbalance here, higher time frame. Maybe Wednesday we come up higher. That would be our Wednesday high. We come lower, and that would be our Thursday expansion lower. Ultimately, I want to be targeting, and I did recently just find this out, but we have an event horizon PD array, which is going to be the current new week opening gap and the previous new week opening gap. If we take the 50% of both of them, this is the EHPDA right here, and we can expect price to draw to this PD array. So if we are looking for shorts going into Wednesday, Thursday, I'm going to be targeting 44.69 right there. So that's higher time frame analysis for ES. So just to sum it up on ES, we'll do a pre-market analysis tomorrow morning when we tape read. But for now, liquidity sweep right here on this high, targeting the weekly 50% consequent encroachment on that 4-hour rejection block. I would want that to be our Tuesday high of week. Displacement lower. And then targeting this low right here, this short-term sell-side liquidity. Okay, so there's a lot of lines here. Let's just break this down. Give me a second, guys. I want to make this look cleaner if you guys are noting this at the moment. All right, so retracement, manipulation, liquidity sweep, tapping into the rejection block, targeting the sell side liquidity right there. NQ, same exact thing. We have this weekly order block we're inside, which is right here. Tapped into it, made a higher high. Where would our breaker block be? This one is a bit more iffy, but it could be either here, which it looks like we swept that high, tapped into it, and we're currently rejecting. Or it could be this one right here. That is also a breaker block. Liquidity sweep higher, and then expansion lower. But first, I'd like to see this high get taken. Maybe we even get SMT here on the indices. But this one is just cleaner because we have the rejection block lining up perfectly with the 50%. This one, not as clean. The rejection block is down here. As we can see, we rejected there. Heading lower. Could you please explain once again how it's a breaker block? Of course, yeah. So, I'm going to give you the simple version of a breaker block. So a breaker block needs a few steps to become a breaker block, right? We need a liquidity sweep. Okay. Once we have a liquidity sweep, we would want to see a change in the state of delivery. What does that mean? What does a change in the state of delivery mean? What PD array tells us that we're currently experiencing or we're going to be going through a change in the state of delivery? Does anybody know the PD array? Starts with an O. Order block. Perfect. Yeah. Perfect. Yeah, so order block, we're going to be having, this would be our theoretical order block here, right? So if we ignore this for now, right there, in this real-time scenario, we have a low, a liquidity sweep, and here, what if we tap into a higher time frame PD array here? Let's say this right here is our weekly fair value gap that we were mentioning right here. We just tapped into it. Would we want to be short? Would we want to be going long here off of this order block if we just tapped into a higher time frame PD array? No, right? Perfect. Yeah, so we would expect price to respect this PD array, head lower, and what happens when we disrespect this order block and we head lower past it? What does it become then? This becomes becomes resistance, a breaker block. Perfect. And then a retracement into the breaker isn't enough for an entry. What do we want to see in this leg lower? We want to see what PD array? Fair value gap. Perfect. So let's say the fair value gap lines up perfectly with our breaker right there. What is that called? A breaker fair value gap. A unicorn, right? Perfect. There you go. And that is our breaker play right there. So if this is the simple method. Obviously on entry you want it to line up with macro. You want to see all of these steps be involved here. But this is your simple scale model. Our real-time model is here. So we have a order block right here, a high time frame PD array getting tapped into. Displacement lower, do we see a fair value gap? No. Do we see a close below? No. So what I'm expecting here is a retracement. Again, once again, taking out this liquidity here, expansion lower, and then now what does this become? That becomes our new changing the state of delivery, perfect, and then it becomes our new breaker, right? Because we swept liquidity, higher time frame PD array, which is our 4-hour rejection block getting tapped into, and then we would expect a retracement once again with a fair value gap. We even have the new week opening gap right here, tapping into it to head lower right there. Did you get that, Amco? Hopefully I was clear with that. Oh, thank you, bro. Thank you, thank you. Yeah, so that's on ES. It's much more cleaner on ES. Everything is much cleaner. On NQ, it's a bit, we have, these wicks kind of crazy. So with NQ, we're still expecting the same thing. We're still expecting the liquidity sweep. And then we have our displacement lower. This becomes our fair value gap right here. We have a retracement into an imbalance somewhere in this area. And I still have not yet marked out the new week opening gap on NQ, but it's right there. It's going to be that yellow line right there. Let me make it much more clearer right there. So if we could tap into that new week opening gap inside that breaker, that'd be perfect. CPDR, damn, we're exposing the methods like that with standard deviations. Damn, bro. Damn, hey, we gotta gatekeep that method, bro. Come on, Sufane. Yes, I have one question though. If you sweep the liquidity on the upside and go into the weekly fair value gap in the diagram you just drew, the order flow is still bullish, isn't it? Hold up, let me read that again. I got confused. If you sweep the liquidity on the upside, which is this one right here, right? You're talking about this liquidity sweep? I'm doing good, Sufane. How are you, bro? I missed you, dog. It's been a minute. Are you talking about this liquidity sweep, Amco? Tapping into that higher, that weekly fair value gap? No, the diagram you just drew. Oh, you're talking about this diagram. Okay. No, the diagram you just drew just now when you expand the breaker block. Yeah, okay, this one, right? If you sweep the liquidity on the upside, which is this liquidity sweep, and go into the weekly fair value gap, which is this one, isn't the order flow still bullish? Yes, but what did I say we want to be looking for? We want to be looking for the order block to be what? Order flow is still bullish at this point. Real time, if we look at it, like, forget about this part right here. If we look at it like this, it's still bullish. Order flow is still bullish. But what tells us that we have that order flow is no longer bullish? What happens here? What is happening here? Once we, I don't want to give away the word, but there's a word. Market structure. Perfect. Yes. Good stuff, Jules. Market structure shift, right? So there's two ways of determining market structure shift. Does anybody know the two ways of determining a market structure shift? We already mentioned one, displacement, right? There's two PD arrays. What two PD arrays tell us that we're currently undergoing the market structure shift? Yes, yes. Good stuff, Dust Bus. Good stuff, bro. Fair value gap and order block. Those are the two PD arrays you want to be looking for that determine market structure shift. Damn, thank you, Sofane. Appreciate it. Yeah, if you guys ever need help with anything, don't like don't be hesitant to ask. Like I'm always willing to help. Like Sufane said, I'm always here to support. And I appreciate if you guys support me. But yeah, going back, thank you, Sufane. But yeah, fair value gap order block. So let's say we have a fair value gap here. Okay? This is our BISI here. This in this leg higher. So forget about this for now, right here. Forget about that. Let's just look at this right here. So Amco said we're still bullish. We still have the order flow is still bullish. So right here we're still bullish, right? We have a fair value gap order block. Technically, that's a good setup, right? We have an order block, a fair value gap overlapping PD arrays after a liquidity sweep. So that was technically our 2022 model, right? So in this case, why aren't we looking for longs? All right, now let me explain that part. So, like I said before, we have this weekly fair value gap, and if we're trading this intraday and we're on the 5-minute chart right here, and we tap into a weekly fair value gap, what is going to be stronger, the weekly fair value gap or the 5-minute fair value gap? It can go past the weekly fair value gap. Exactly, yeah. But in this scenario, we didn't. We respected it. So what is going to be stronger in this scenario, the weekly fair value gap or the 5-minute fair value gap? Exactly. So then, would this be a high probable trade right here? Would we want to be longing this if we just came off of a weekly fair value gap? No, right? It can still move. Like, don't get me wrong. Like, I've seen plays where it comes like this and then it moves up 5 points. You'll get your 5 points, but you're risking it because we just came off of a weekly fair value gap. I'm not saying you're not going to get a good move off of this fair value gap order block. I'm saying we want to be trading exactly high time frame order flow. We want to be trading higher probability trades. So what would be our high probability trade here, right? We would want to be patient, wait for displacement, and this is what we want to be looking for, the market structure shift. This fair value gap, what would it turn into if we come lower like this? What would this fair value gap turn into? Inversion, right? Inversion fair value gap. Right there. So maybe we come up, tap into it, displace lower, and then what does that order block become? That's the other PD array that we were looking at for a market structure shift. And that order block becomes a breaker block. Perfect. So then that's our entry right there. That right there. That's our entry. Obviously, within macro, everything lines up. Did you get that, Amco? Was that clear, everybody? Of course, bro. Yeah, I'm always willing to help. Yeah, so that's what I'm looking for right now. Going into tomorrow's trading, we have a Tuesday high of week. tapping into taking liquidity, tapping into that right there, and that is our play. Same with NQ, that is our play right there. And that basically sums up our higher time frame analysis. So if you guys join alerts or VIP, if you guys want to do one-on-ones, but if you guys are in alerts or VIP, I do these every day. So every day before, and for you guys that are already in VIP, you guys can go through the KISS analysis channel and you can see how it plays out. So like you can actually go through my analysis, see how I do it, and this can also be very educational for you guys. You guys can go through my analysis, see what I look for, and then go back into your own charts and compare it. Like, okay, what was he looking for? What was Kiss looking for? Going into tomorrow, was he looking for this PD array? Was he looking for a fair value gap, an order block? You know. So this is recording right now, so you guys can go into this specific recording and you can play back all of this right here. All of this. If you guys are still kind of confused on the breaker, you can play this back. But yeah, once we get to this daily fair value gap, we'll go from there. But for now, going into tomorrow for our tape reading session, we're just going to be focusing right here. We don't want to get too caught up ahead of ourselves. But just to sum it all up, just to for you guys that maybe joined and missed a few things, bullish on the dollar, long term, targeting these equal highs right here, targeting buy side liquidity, but we want to see a PD array get tapped into. So retracement for our fair value gap, which is right here, get tapped into, eventually displacing higher. As the dollar comes down, I would like to see ES come up into this rejection block. And eventually, once they both line up, I would also be looking at both markets to line up, the dollar and the indices. Once they line up, boom, we are officially bearish for the rest of the week, targeting the equal highs if we're bullish on the dollar. Going into the indices here, if we want to see lower short term, we're going to be targeting this daily BISI, ultimately targeting the previous week low, which is this sell side liquidity down here, ultimately targeting the weekly fair value gap. That's quite the move, guys, but for now we don't want to get caught up lost in the sauce. So we're just going to be focusing this little area right here. But I did just want to finish up the analysis just so we're all on the same page. If you guys missed some levels, you guys can go back into the recording. But for now, I did want to do a Q&A. So for example, like Amco had that question with the breaker, for example. So like if you guys have any questions with the breakers, if with, why does market structure shift? Like if you guys have any questions, like this would be our little Q&A area. So ask away. And if we don't have questions, we can call it a day right here, if you guys want. How do you apply the 2022 model intraday? 15-minute raid opposing biased. So 15-minute charts I don't really look at. If I'm looking for a 2022 model, I like to look at the 5-minute. So how would I apply it? Well, we can apply it. So the good thing about the breaker model, the 2022 model, and the power of 3 with accumulation, manipulation, distribution model is they all have the same exact thing. What is that same exact thing? What is that one step they all have in common? Do you know? What is that one step they all have in common? 2022 model, breaker model, liquidity sweep. Perfect, yes. They all have a liquidity sweep. So, with that in mind, let's get rid of this little model here. And let's just focus on a 2022 model for now. Alright. So 2022 model, we have a liquidity sweep. We have break of structure with displacement, retracement into a PD array, right? Obviously, if we have a overlapping PD arrays, for example, like an order block right here with a fair value gap right here, or maybe it can even be an inverse fair value gap right here, tapping into that. But all in all, we have 3 steps, right? And that is my checklist. And if you guys did see my recent thread on Twitter, Slick, I'll get to your question in just a second. Let me finish this question. But if you guys watched my or read my thread on Twitter, I said my checklist simple, like you want to keep it simple. My checklist is liquidity sweep, breakup structure with displacement, and retracement into a PD array, which is exactly this right here. So once we get that retracement, we would want to be within macro right here. So this would be our macro area here. Those lines are so crooked. There we go. So we have our, let's just say it's our silver bullet, right? This is our silver bullet right here in this time frame here. So we have that retracement, that would be our entry. Now, if I see this on the 5-minute, if I see this displacement on the 5-minute and the fair value gap looks like this, I would drop down to the 3-minute. And let's say zooming into the 3-minute, we have, I can't even, okay. So let's see on the 3-minute, the fair value gap looks like this. It narrows it down. So on the 5-minute, it may be a little bit more confusing, but if I'm applying the 2022 model intraday, I'm going through the 2, the 3, the 5-minute, narrowing down or finding imbalances that align with the model. On the 15-minute, however, if I were to apply it, let's see if I can come back over here. If I were to apply it on the 15-minute, the fair value gap would be, I would mainly just look for market structure on the 15-minute. I would see, because the 15-minute, I don't look for entries. I would just solely look for liquidity sweeps and changing the state of delivery on the 15-minute. It's much, much cleaner on the 15-minute if you find the change in the state of delivery. And if you find the change in the state of delivery on the 15-minute, let's say this is your liquidity sweep, this leg right here. Or actually, let's make it like this. So we have this leg, little retracement, and then we have like this, right? And this is the 15-minute chart. And the fair value gap on the 15-minute chart is this big right here. So on this liquidity sweep leg here, what tool would we use? What tool would we use on this liquidity sweep here? Standard deviations, perfect. We would want to use our standard deviations on this liquidity sweep here. Now, if this is the hourly chart right here, so the start of this candle's here, and the candle ends here. So let's just say this is our silver bullet time frame, 10 a.m., 11 p.m. Okay, so our candle here looks a little something like this, right? When it expands higher. Now once we get this manipulation lower, the wick looks like this, right? So what is this manipulation low? I mean, what is this in general? This would be our power of 3, right? So if we know that this is our power of 3, we can expect the displacement or the open of the leg to be at our next higher time frame PD array, and that's when you would go to the 15-minute and you would look left. So let's say over here there was a high, so you would expect this high to be your next drawn liquidity, and that would be your distribution on this entry. And let's say you use your standard deviations here. What you would do is for your partials, and this is the sauce right here, this is why I trade at micros. Let's say you only trade ES, 1 contract. On micros, you could trade 10 contracts, which is 1 mini. At 5 points, let's say 5 points is this high right here. At this high, which is 5 points, you would take, let's just say, 9 contracts. Or let's just say you take 8 contracts, right? You take 8 contracts here, you have 2 contracts left on your play. So boom, right here. Play runs up, you take partials, 8 contracts. You have 2 contracts left. Where would be your next partial? Where would be your next partial? Perfect. Your second standard deviation, which is where you would expect price to have a short-term retracement. Okay. Here, let me actually, I'm gonna give you the sauce right here, guys. So, second standard deviation, right? Okay, and where would your last partial be if price keeps heading higher? 3 to 4, perfect, yes. But what if this is your buy side liquidity here? You have buy side liquidity right here. Would it be the 3.5 to the 4? Or would it be the buy side liquidity? Buy side, right? Buy side liquidity, perfect. You see, man, you guys know what you're talking about. Let's go. Yeah, so this is your model play right here. This is your 2022 model play with that extra sauce added into it. Now, what does the 1 to the 1.5 mean? Does anybody know? What is the 1 to the 1.5? What does that signify? Silver bullet entry. Perfect. Yep. So when price taps into here, do you go long right off of it? Or what can you expect when we tap into the 1 to the 1.5? Does that mean, oh my God, we tapped into the 1 to the 1.5. Let me go long. What can we expect? And it's basically already drawn out right here, but we're just going over it. We can expect a retracement, right? A retracement into a PD array. And into this PD array, this is where, right here, this is where you want to be looking for your entry. So on the 5-minute, let's say you're on the 15 and the 5-minute, you're going to be looking for this market structure right here. But once this gets tapped into, that's where your light bulb turns on. That's where your alarm's going off. You're like, yo, okay, this is it right here. We're looking for a play, okay? So once we have that play lower, then you drop down to the 3 or the 2-minute, and there should be an imbalance within this displacement higher to target, and that would be your entry there, targeting the 2 to the 2.5 or that buy side liquidity. So we can expect a retracement into the first imbalance that price can seek right there. Does everybody get that? So that is how I use my 2022 model intraday. And for you guys that are uh in the alerts or the VIP, you guys have seen me do this multiple times. So if you guys want to join, for you guys that aren't in yet and want to watch me do this live, it'd be insane. Is there a recent chart example? Yes. I actually have a perfect day for this. I'll get back to that, Amco. I do want to answer Slick's question. When you said you were looking for a Tuesday high of the week, are you looking for potential SMT? Do you only look at NQ and ES for SMT? Do you look at YM as well? I've yet to figure out. So, Josh my friend Josh, he pops in here every once in a while. He does look at YM for potential SMT, but me personally, I do not. Like, that's something, I don't know if it's a bad thing, but I mean, personally, I just don't think it's necessary to be looking to have like all indices popped up. But that's why I only look at NQ, because NQ and ES they kind of go hand in hand with together. But yes, to answer your question, yes, I do look for SMT, but if there isn't SMT there, SMT is just like a plus, you know? It's like something that just adds the cherry on the top. But if we don't get SMT, either way, we're still getting liquidity taken on both indices, which is still pretty good. But if we do get SMT, it's just that's like the sprinkles on your cupcake, you know? It's like, you know, you don't need them, but it just makes it look nicer, you know? So if SMT is there, it just makes it a little bit better. But yeah, I would only focus on ES and NQ because this is literally your real-time RSI right here. People think RSI is like, oh, you know, if it gets to the 30 or the 70, it's relatively stronger, relatively weaker. Nah, this right here, this is your RSI. If you're looking at both indices right here, what is this? Okay, so if you're looking at both indices and you see NQ heading higher towards the high and ES is still towards the lows, you can expect NQ to make SMT. And once we take out liquidity up here. Let's say we take liquidity here, tap into the 50% on NQ. ES still hasn't done it. And then we start displacing lower on NQ and we start correlating here on ES. We can now see that the relative strength index, this is our indicator, this is our RSI. We can see, okay, NQ is relatively weaker, so ES will follow. And this has to do with the six sister concept. So NQ, or typically it's mainly NQ that's the leading indice. So if you see NQ dumping and you see it relatively weaker, and you can expect ES to follow. So that's kind of just like a little hint. And that just takes time with just chart time to see that. But once you start looking at both indices, you'll notice it. You'll notice it start to form. Amco said, is there a recent chart example of this model? Yes. Okay, so that actually hyped me up because I believe, and I actually did record this. It's on my YouTube. It's on my YouTube. Matter of fact, here, let me pull up. Okay, let me pull up. I'm gonna pull up Twitter real quick, guys, because I did record this. Right here. Okay. Really quickly. So when I put it full screen, guys, does it go full screen for you guys as well, or what is it? Does it look like? Does it go full screen for you guys too? What is the six sister? I'll go over that right now. Click it. Click it. Here, I'm gonna click it. And it's full screen right now. Is it full screen for you guys as well? Like when I put it full screen? Yeah? Alright, bet. For sure, for sure. Alright, so I'm gonna restart that. And can you guys hear the audio? I do want. Can you guys hear the audio? You can't hear the audio? Can you? Low, but yeah. Here, let me see if I can, because it's all the way up. Alright. So I'm just gonna mute up here, guys. I'm gonna play the entire recording and then we'll review it. It's took 2 minutes, so I'm gonna mute up. About to get filled here. There it is. Right into our breaker to the tick. Let's see, 5 points on that. We'll just do 5 points, just here. And then next CP will be at the second standard deviation, 11 points. Right there. So partials have been set. This is like in the middle of a news driver though, so look at that. First partial taken. Straight to first partial. Let me screenshot that right there. And this should reach our second partial instantly. First partial. And the second partial. Really quickly, guys, I paused it right here, but notice how I'm watching NQ. When we tap into this breaker here, ES at the same time tapped into that breaker there. So I'm always watching NQ to see if it's respecting it and heading higher. And notice how NQ, I'm going to put it back a little bit here. Notice how NQ is quick to head higher, and watch ES follow. And second partial right there. Perfect. Look at that, guys. Alright. So, what can we extract from this play here? So, did you get like did you see Amco the setup? How there was liquidity swept here? there was liquidity swept. So let me just quickly see the day. It's the 29th of August. So let's actually go on that day here and let's actually look at it. It's going to be this day, right? No, that's July. Damn, I went back way too far. August 29th. Okay. All right. So, August 29th, we're going to do it on both indices here just so we can dissect this model. Okay. Yes, you could see that. All right, perfect. Yeah, yeah. So, also Jules, that was a bit of a sixth sister right there. A little. So what the sixth sister is, before I head into this little explanation of this day, the sixth sister, it's not six, it's sick, like you have the flu or the cold or something. I don't know. The names ICT comes up with are goofy as hell, but sixth sister means that one indice is leading or has relative strength. For example, RSI. That is an indicator we don't use, so we use the indices. The indices will tell us which one is relatively stronger and which is relatively weaker. So the sixth sister concept is if NQ is relatively stronger, we can expect ES to be the sixth sister and follow. So it's something you just have to see in real time, and you will get that with like just chart time in general. But typically that's why I always watch both of the indices because it'll tell you which one is leading and which one isn't, and that also has to do with relative strength on the indices. Anyways, okay, here on the 15-minute for Slick, we were talking about the 15-minute, right? And this is the 15-minute on both indices. And on this day in specific, damn, why did it send me way back here? On this day in specific, at market open, okay, I was looking at this 4-hour order block on NQ. That was what I was paying attention at. So if we tap into a higher time frame here on NQ, what can we expect the indices to do? We can expect it to go higher, right? So once we tap into that 4-hour order block on NQ, we drop down to the 15-minute and we look at market structure. And I do this every single day, pre-market analysis with the team. We do like a little summary of how the overnight went. So we tapped into this order block here, 4-hour order block, and NQ started respecting it and it's displacing higher. So if we drop down to let's do 5-minute. If we drop down to the 5-minute now, what is this model here? This is a breaker, right? So we have our high liquidity sweep tapping into that higher time frame PD array, and we can use this high as our breaker right there. For ES, our breaker would be right here, and we can see where it respected it. So now, just like in the video, or just like in our scale model, we said how we have our last leg here before manipulation lower, and where did we tap into on the standard deviations before we came back and retraced into our PD array, into our breaker with a fair value gap, the 1 to 1.5, right? So this was the last leg before sweeping liquidity right here. So we can use that as our standard deviations, and we can expect price to come up to the 1 to 1.5. We didn't take a trade until it retraced, and that was our model entry, and that displaced higher there. Eventually, I mean, heading to the 4, but we took full partials here at the 2. And at the same time, we were watching NQ, watch NQ displace higher with ES, and that's kind of like a little back test of how you can use both indices to gauge market sentiment. But yeah, did you see how the example played out? Did that make sense? Just one question in this model. So in the bullish example, what do you do if you get a fair value gap in the retracement leg? I think there was a fair value gap in the retracement leg. No, there wasn't. Okay, so I mean, if we narrow it down to the 1 minute, there was a fair value gap. Oh, I see what you mean. Okay, I see what you mean. Yeah, that's perfect. So to answer this right here, now going back into our pre-market analysis, remember what we said on NQ? What did we tap into on NQ? What was that high time frame PD array we tapped into? A 4-hour order block, right? So what bias does that automatically give us? Bullish, right? So yeah. Why did we choose ES again? I mean, you could have. I mean, if you trade NQ, you could have played NQ. Like it's still the same exact thing. You had that breaker, you had that fair value gap, but it's all discretionary. Like it's up to you which indice you want to trade. Me, I like ES. It's much more precise. And when I traded the 3 minute, for example, on the 3 minute, look how precise this was. We had a that same fair value gap, that breaker right there. Our entry was one tick. Our entry was there. So we were in drawdown 2 ticks before price just shot higher. So same with NQ here. I mean, if we go on the 3 minute, did the same exact thing. So it's up to you. I mean, both indices. You want to see both indices correlating. But to answer your question, Amco, yes, you would still long the BISI because that's why we do these high time frame analysis because we want to be looking at higher time frame. What is the bias on the higher time frame? If there's a, for example, if there's a 3 minute fair value gap, but we just tapped into a 4-hour order block, do you think that 3 minute bearish fair value gap will hold? And if there's draw to liquidity to the higher time frame buy side liquidity, do you think that 3 minute fair value gap will basically like stop price from heading higher? That's why we always, yeah, that's why we always want to be paying attention to the higher time frame. The higher time frame will tell you where the draw is, and once you know the draw, then you can find the entry, just like that. So we need a high time frame. Yes, yes, that's why we do these analysis. You want to be doing the analysis the day before. You want to have your bias the day before. So going into the intraday sessions, you already have the draw liquidity. You have your bias. You want to see your levels play out. You don't want to be going in blindly trying to short or long every single fair value gap that you see. You know what I mean? High time frame is the way. It is the sauce. But yeah, guys, does anybody have any more questions? I don't want this recording to be insanely long. I think we're already pushing about an hour. Yeah, of course, Samko. We're pushing about an hour, 5 minutes here on the recording. So if we have no more questions, we can end it here. I'll be posting the recording shortly. I do have a one-on-one after this recording. So once I finish that one-on-one, I will post it after. It'll be on YouTube just for you guys to go back and look into the levels. I know some of you just joined. But this anybody have any more questions? If not, we call it a day right here. Thank you guys for joining. We did have a good amount of people at one point for the analysis. But if not, we can call it a day. Thank you guys for joining. I really appreciate it. And of course, yeah, yeah, of course, yeah. And if you guys want to tune in, for you guys that aren't in alerts or VIP, if you guys want to tune into our live sessions, you know, a lot of people, a lot of traders, mentors, they, I mean, I feel like I said this before and I feel like a broken record when I say this, but a lot of mentors, they like to, you know, they like to teach, but they don't put it into practice. So that's what the live sessions are for, so you guys can see damn, that voice crack, how I, put of course, bro, yeah, how I put these plays or these models into practice day by day, and I call out, you know, plays live. But yeah, I'll end the recording here.